Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather. It's January the 26th, which is Australia Day, so happy Aussie Day to all the Aussies tuning in. Well, we had a huge week on both DAX and FTSE, and in this video, I'm going to take a look at the FTSE 100, the UK stock index futures. Let's take a look at the FTSE 100, the UK stock index futures. So I've got the monthly chart here. The ticker is UKX on TradingView. I've got a 20 bar and a 200 bar EMA. So if I'm a bull, I want to close above the high of last month. Here is a spike and a pullback, and the bulls would like this to continue as a spike and pullback channel. This channel has been going on quite a while. We had a trading range down here, and there's an argument that this is where the end of the measured move is. Other bulls are going to look at the prior all-time here and say, well, we broke out of that prior all-time high with a spike, and then we had a pullback. So there's got to be some kind of measured move in here. There are a few lows down here. So you can see that is the gap. So is that a measuring gap? If I use the bottom of that bar, then that takes us up to 86,267. I usually mark in line with where the pullback is, so I know where that line is. Here is a spike and a pullback, and a measured move of this trading range is a little bit higher. But what do I notice about this particular channel? Well, we've had a couple of decent bull bars and then sideways. A couple of good bull bars, sideways. Very sideways in here to break out of that channel. This is more like a trending trading range. And a channel is just a series of small trading ranges. We're testing a new high. Traders are wondering whether we're going to get a breakout and follow through, or we're going to close under that high. The more this monthly bar closes on its high, the more chance there is that we're going to keep going sideways to up. I stick my channel on the edge of that moving average and at the highs. You can take in more price action doing this. The reality is the midpoint of this channel is important. Channels are a form of sloping trading range. As we get into the lower half of the trading range, traders start to buy. In a bull channel, traders will start to take profits around the highs, or they'll look at a second entry short to get out of that long position and look to buy lower, buying low and selling high. So that's on the monthly chart. What about on the weekly chart? Well, we've got 4 consecutive bull bars. This is a bull micro channel. It is the 3rd consecutive close above the moving average. That's good. It was a strong close above the high of this prior trading range. That's important for buy the close traders. This is an important signal bar. This says traders are willing to hold their trades above this range. This bar is also big, which makes it a big risk. And that's what I said last week for both DAX and FTSE. These big bars don't usually get strong follow through. You can see here, not a lot of traders willing to buy above the high of that bar. The open of this bar is 0522. The close of this bar is 02. So it's actually a very small bear bar. And that means this is a sell signal, but it's not a sell signal for traders to short. It's actually a sell signal for bulls to get out of their long positions. Other bulls bought above the high of this bar. I think that's aggressive in a breakout. If you put a stop at the low of this double bottom, somewhere after 3 bull bars and during this bar, you can get long. That was your 1-to-1 target. If you put a stop below this inside bar and bought somewhere around here, your target's a little bit above at 9,000. So I think the monthly chart's now going to come into play. We're going to close the month next week. Bulls need the close to be above 84.75. Bears are going to try hard to push down into this range. Because it's such a strong breakout, it's more likely to get a second leg sideways to up. But because we have a lot of trading range price action, there are breakout points at the high of the last sell climax, prior all-time high. So we might form some kind of counter trend wedge. What do the bears want? Well, the bears always want to trap the bulls high and then rush all the way down to the lowest breakout point here, 8,300. And considering all the sideways price action here, it would be very unlikely for us to go straight up. This was 9 months of sideways price action here on the weekly chart. So the bulls have to work very hard to stay out of this range. But always in long, the bears had a double top that failed. And that means there's a chance for a measured move. If I just take the bodies, if you use, so a rough measured move would be around 8,700. Another way to measure these measured moves is to look at a failed signal here. That was a short signal. If a bear sold there and had a stop, they need to exit on this big bull bar. And if they become a bull, then their target is 8,600. So I still think we're going higher on the weekly chart. but the bears would really like to trigger to go below this bear bar to end this first leg of the bulls. So what about on the FTSE daily chart? We can see 3 huge bull bars closing on their highs. We actually formed a high one buy, but we never went below a bar for a bull micro channel. This was a buy signal very high up in the range, breakout, a pullback bar, and then a buy signal. And then it's immediately failed here. So what can happen here on the daily chart? Well, Friday is a sell signal, but that sell signal is not a good scout. If a bear sells this in a tight bull channel, because the probability is less than 50%, they need it to come all the way down here to 8,300. Probability says these bears are going to have their stop run. So if you sold and put a stop above there, so what a bull's going to do instead? Well, if you're a bull and now you know what the bear trade looks like, so selling there, stop above, swing target is there. Bulls are going to do the opposite, which is buying somewhere in here, betting they're going to run the stop of those bears. This is a strong bull spike above the high of a prior trading range. Their probability is really good until they see a second entry short. We haven't triggered a short yet, so there are magnets above. One of the problems the bulls have is that their stop is very wide. Where do you put your stop? The stop at the low of the spike is here, and your 50% pullbacks there. Other traders might use the last breakout point, and can you see how that line is just below there? So they're betting that this swing won't overlap. I think traders bought up here betting it was going to race off. When they saw this bull inside bar, that's now the end of a leg. I think it's better if you're a bull to wait for 2 legs sideways to down or a better buy signal. And what happened to them? If you bought above this bull bar, you got your 2 to 1, you're happy. If you bought these consecutive bull bars with a stop down here, you got your 1-to-1 target. There was your first indication you should take profits. And I think a lot of those traders that bought this bar here just got out. They might buy again lower for a swing. If a trader buys this huge bar here with a stop down there, they don't have their 1-to-1 target. If they waited for the bar to go above to buy the close, they missed it. If they bought the close of that bar with a stop down there was a half R target for them. And because this bar is so big and so strong, half R is generally a good target if you're trading that way. So I think a lot of these later bulls might have gotten out. Anyone that bought a high one that far up has got a very wide stop, and they're going to be more than happy to scale in lower because that's their style of trading. I think that trade is going to take too long for those traders. And now you've got a very strong outside down bar. Some might scale in, others might just decide to get out, wait for a pullback and wait for another buy. So always in long, but I think the bulls have hit a lot of profit targets up here, and it might form some kind of a pullback, a wedge pullback to the high of last month. Well, thanks very much for watching. I hope you found that valuable. If you're in the Books Price Action trading room, I'll be trading live Monday and Friday this week, so I'll catch you then. Otherwise, you're welcome to ask me questions in the comments or send me a message on the Discord. For everyone else, have a great trading week, and I'll see you next weekend.